This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 9th, 2015. So while we did see a bit of a pullback in the euro on Friday, with the market trading all the way back down to the 1300 area, the market is still correcting off of the recent 1098 11-year low that was set in late January. Ultimately, at this point, a break below 1265 or back above 1535 will be required for the next clear directional bias. Push back above 1535 would open the door for a more corrective action towards 117.50, while a close below 1265 would put the immediate pressure on a retest of the 1098 low, which guards against 110 further down. Again, the overall downtrend remains firmly intact in this market, with the 50-day moving average defining resistance. Only back above the 50-day moving average would compromise the bearish outlook, and the 50-day currently comes in around 1925. Sterling dollar. So cable has taken a little bit of pressure off the downside following the break above 52.70, and this could potentially open the door for a move towards previous support at 54.85 further up. However, the downtrend here remains firmly intact, and the market is still focused on putting in a lower top somewhere in the 54.85 area or ahead of that level, ahead of a bearish resumption, fresh lower top, and break down towards and a retest of that recent 2015 low at 49.50. Dollar yen. So dollar yen still remains confined to a multi-week consolidation defined between the 7-year high from December at 120.185 and 115.55 on the downside. But the market has recently broken out of a triangle, with the break above triangle resistance now opening the door potentially for a push up towards that 7-year high at 121.85 and a bullish resumption. A break above 121.85 would expose fresh highs towards 125 further up. Ultimately, only back below 15.55 would compromise the immediate bullish structure. Euro Swiss. So Euro Swiss has been consolidating since breaking above 102.50. The market had been defined between 97.10 and 102.50 before breaking out to open a measured move upside extension at 107. We've since stalled out shy of 107, but any setbacks are expected to be well supported by that previous resistance at 102.50 ahead of a break back towards that measured move at 107. Aussie dollar. So Aussie dollar remains locked within a clearly well-defined downtrend, with the market recently breaking down to fresh multi-year lows at 76.25 ahead of this latest bounce towards 78.76. At this point, a break back above 78.76 would be required to open the door for additional corrective activity, while ultimately the downtrend remains firmly intact and a lower top is sought out somewhere ahead of 80 in favor of the fresh downside extension below 76.25 and then towards the 70 area over the coming weeks. Dollar CAD. Dollar CAD remains locked within an intense uptrend, with the market in the process of consolidating and correcting recent gains that were rallied up towards the 128 area. However, the market is in the process of looking for a higher low now, which should find some support into the 20-day moving average in favor of a medium-term higher low and fresh upside extension back above 128 and towards the 2009 high at 130.65 further up. Kiwi dollar. Kiwi has recently rallied out from multi-year lows, 4-year lows around the 71.76 area, up trading towards the 75 area ahead of this latest minor pullback. But a lower top is sought out somewhere ideally ahead of the 76 area in favor of fresh downside back below 71.76 and towards 70 further down. SPX 500. The S&P 500 continues to chop around off record highs, but is showing signs of some form of significant top. A break back below 1968 would be required to confirm and open the door for a downside acceleration towards the October base at 1820. Ultimately, only back above or a close above 2070 would compromise this bearish outlook, this toppish bearish outlook, and above there would compromise that outlook and expose a retest of the record high and push beyond 2100. Gold. Gold has recently seen sharp pullbacks on Friday, with the market breaking down below 1250, trading all the way down to the 1228 area ahead of this latest minor bounce. But ultimately, the market is still showing signs of recovery, and a higher low is now sought out ahead of 1200 in the 1220 area in favor of a fresh upside extension and push back above the recent 1308 highs and towards 1345 further up. That's all for today.